Welcome to our monthly look into the Hamilton, Ontario residential real estate market for February 2024. This month's update sheds some light on intriguing trends, pricing dynamics, and what these could mean for you, whether you're thinking of buying, selling, or simply keeping an eye on the market. So here we go. We'll kick off, as usual, with a look at the median sale price, which landed at $735,000 this February. This represents a 2.8% increase from January, yet when compared to February 2023's $750,000, we're seeing a slight decrease of 2%. Historically, we expect a larger bump around this time of the year, but the 2.8% rise falls short of the last decade's average of 5.25% increase from Jan to Feb. So it's a bit of tempered enthusiasm in the market, and one might say counter to what a few loud voices are espousing out there on social media right now. Next, on to cumulative days on market. Homes are spending more time on the market, with the median days on market jumping to 28. Now, it's down from January's 59 days, but up from last February's 22. As you know, this slower pace is a stark contrast to the brisk sales we've grown accustomed to over the recent years. And the months of inventory ended at 2.4 months, which was down from the 2.9 number it ended at in January. But a half-month drop from January to February is pretty typical. And from a longer-term perspective, it was up from 2.2 months a year ago, last February. And at 2.4 months, it's the third highest we've seen for February in the last 10 to 12 years, and 50% higher than an average February. So the moral of this story is that we've got a much higher than normal relative volume of inventory on our hands in the market right now. As for the number of sales of homes, it's a mixed bag and can easily be misleading. Sales ended at 508 units sold in February, which was up 6.5% from the year before and up 2.5% for January. So you can't complain, right? But just hang on. Last February was the slowest February in at least 10 years, so the bar was really low. And we normally see a jump from January to February of around 40% in terms of unit sales, which makes the 25% jump of this year look pretty sluggish. Also, the sales volume in January was at a rate equal to 81% of the average number of sales in February for the last decade or so, which was quite disappointing and obviously below average, but really disappointing after seeing January end at 91% of average, which was higher than any month in 2023. So then the 81% we saw in February feels a lot more like the super slow year of 2023 than any type of bounce back in demand. Now, for what's coming onto the market, in February, we saw 897 new listings, which is a 21% increase from last year and a 32% jump from January. Now, this influx surpasses typical growth rates, pointing to a market with way more options for buyers. Now, our favorite little critical metric, the sales to new listings ratio, stood at 57% this February, falling from January's 60 and last February's 64. And it's the lowest we've seen for a February since before 2013. And to add insult to injury, February is traditionally one of the year's strongest months. We have yet another signal of a cooling market, not a crashing one by any means, but definitely heading towards a greater balance of power between buyers and sellers. Now, overall, the effect on total inventory is that we saw just over 1,200 units on the market at the end of February, a small increase of 3.5% from January, while the increase year over year was more significant at 17% compared to February of 23. Now, from a more broad perspective, the inventory at the end of February sat at a number that was 28% higher than average for the end of February over the last decade or so. So that means far more inventory is on the market than we're used to for this time of the year. Now, just in summary, from everything we talked about, here's what we saw. A price bump from January to February, but lower than what we normally see from Jan to Feb. The time to sell is roughly twice as long as we've grown accustomed to over the last few years. And the number of sales are up slightly from last year, but compared to averages, February was significantly slower than January. New listings are increasing at a pace higher than both last year and last month, neither of which were robust periods. And sales to new listings cooled to a new low for February and was down from January, which is highly unusual, as February is usually at or near the top of each year for that ratio. And lastly, total inventory stayed steady at a volume that's around 30% more than the market is used to. So what does this all mean to somebody who's thinking of buying or selling right now or in the near future? Well, It's just my opinion, but overall, on a very broad scale, it's a ho-hum average balanced market. However, from what we're used to over the last 5-10 years, it seems like a market that's pretty favorable to buyers with stagnated prices and growing inventory. And adding in the fact that we have a general undersupply of housing units in the broader region, and that rates should start to come down before the end of the year, the next 6 months might be as good of a window as we're normally going to see for buyers to lock up a variable rate mortgage and hit the buying trails, at least until either people move away or we get building new units like crazy. And for sellers, fear not, the market is not crashing. I think the undersupply makes for a pretty crash-proof market. So if you need to sell, the market is still going to treat you pretty fairly right now. But if you don't really have to sell, then you're probably going to see some better opportunities to do so over the next, 6, 12, 24 months than you might see right now. But timing the market is pretty risky. So anyways, that's a wrap. Curious to know if this aligns with what you're seeing and feeling out there. And I would love for you to share your insights and experiences in the comment section of wherever you're seeing this video. And for more detailed analyses and up-to-the-minute updates on the real estate market, make sure you just subscribe and like this video wherever you're watching it right now. And I want to thank you very much for your time and interest, and I will see you next month for the March review. Take care.